Tesla's success has gone up. And the main reason for that is their market share, instead of going down, has actually gone up fairly dramatically around the world.
ARK Invest CEO and billionaire investor Cathie Wood is a star stock picker and founder of $60 billion assets ARK Invest, which invests in innovations like self-driving cars and genomics. According to ARK, Tesla Incorporated stock will hit $3,000 by 2025, up from its current price of $655. ARK expects Tesla market capitalization to reach as high as $4 trillion in the best-case scenario, according to a research note published on Friday. The investment management firm set the target price for Tesla at $1,500 per share on a bear basis by 2025 and $4,000 per share on a bull basis. Welcome to Wall Street Winners. Today, we're going to discuss why Cathie Wood, ARK Invest CEO, stands by Tesla stock. Last year, ARK Invest said it expected the company's stock to hit $7,000 per share or $1,400 when adjusted for its 5-for-1 stock split by 2024. ARK Invest also increased the probability of the electric car maker achieving fully autonomous driving within 5 years and said the company's net autonomous ride-hail revenue could be as much as $327 billion by 2025. It expects Tesla's electric vehicle revenue to reach between $234 billion and $367 billion by 2025. Tesla is the largest holding of the high-flying $26.6 billion ARK Innovation exchange-traded fund, and fund operator Wood, ARK's chief executive, has been a long-time Tesla bull. ARK expects there to be a 50% chance of Tesla achieving fully autonomous driving within 5 years, which could allow the company to scale its planned robo-taxi service quickly, according to a Friday note on ARK's website. It also added Tesla's insurance business into its model, believing the offering could be rolled out to more states in the next few years with better than average margins thanks to highly detailed driving data the company collects. Wood has been among Tesla's most ardent supporters, holding large stakes of the company in her flagship fund. When Tesla shares saw a pullback in February, she bought more. According to ARK's new model, in the best-case scenario, Tesla could reach $4,000 per share in 2025, and in the bear case, $1,500. The company forecasts Tesla's unit sales to be between 5 million and 10 million vehicles in 2025, assuming increased capital efficiency. The $3,000 target is far higher than any analyst who covers the company, the highest being $1,200 among estimates compiled by Bloomberg. Fueled by zealous supporters, Tesla shares rose more than 740% last year, the best performance on the S&P 500. Elon Musk, its chief executive officer, became the richest person in the world in January before Jeff Bezos reclaimed the title. According to experts, he absolutely delivered the profitability that they've been talking about with the autonomous cars and everything. That's something that's impressive along with the deliveries they're talking about, so that's giving this stock a little bit of a lift. The robots he has talked about for a very long time really means something, and he's pretty passionate about it. He's trying to build that up a little closer in time than we first thought. In Texas, they're building the Model Y with a structural battery pack and 4680 cells, and will start delivering after the final certification of the vehicle, which should be fairly soon, and capacity expansion will continue through maximizing output of each factory. Apart from this, they're consistently building new factories and new locations in the future. They'll be ready to announce new locations through 2022 by the end of the year. Elon Musk's statement during the Q4 and the financial earnings call 2021 hints that Tesla could be considering multiple locations for more than one factory this year, and interestingly, he did not call these upcoming facilities as gigafactories outright, which may also suggest that some of these new plants may be modeled after the company's other projects like its mega factory in California. Tesla would likely be more deliberate with the selection of its new factory locations moving forward, considering the challenges and delays being faced by the company in its gigafactory in Berlin. While Berlin Gigafactory was built very quickly due to the use of early approvals and facility's final permit is taking quite a long time before it's released, and local groups opposed to the facility have also presented one legal challenge after another to the project, which has caused a lot of headaches for Tesla. For its next factories, it would not be surprising if Tesla decides to establish a presence in its place where it can move quickly and open, such as the one in Texas or Shanghai. Tesla has been around for quite some time in Texas and also in Shanghai, which means that if Tesla decides to open factories in such places, it'll be very easy for them to begin and also finish establishing the factory. But if Tesla decides to do that in some new places where they have no experience or influence like before, then it's going to be quite difficult. So if there is one thing which Tesla has learned is that it should open shop in places where it can operate quickly, because it's very important that Tesla expands as quickly as possible. So doing it in places where it has been before, but it has established a presence before, would be quite easy. Tesla had a strong end to 2021 with beats on both the top and bottom line, but the market was really paying attention to supply chain issues. Executives said that production volumes at the plants in Fremont, California and in Shanghai have been depressed for several quarters due to the ongoing supply chain crunch that includes a cause of shortage of semiconductors. That means that in 2022, Tesla will not be launching any new products. That means no Cybertruck and no semi-truck. The logic that Elon Musk put behind that was that if they don't have the parts to build or ramp up production of their existing products, then they shouldn't move quickly onto new products. They also talked about seeing rising inflation, rising commodities costs which could weigh on margins in the near term. Elon Musk's bold statement is that Tesla, in his opinion, would achieve full self-driving in 2022. He also said that the biggest product that the company was working on this year was not necessarily an electric vehicle or a battery or energy storage product, but the Tesla robot project. He talks about the labor shortages in the economy and that in the near term, when they build up that Tesla robot program, the robots might move parts within Tesla's factories. But in the long term, he wants to erase labor shortages altogether. There are also some other interesting items they're making progress in Austin as well. They're very much still in the tooling phase in both Austin and Berlin, but they do expect to start deliveries of the Model Y SUV from Austin this quarter. There's this question now with Tesla as they ramp up production in both Austin and Berlin and new factories coming online with depressed volumes in Shanghai and Fremont. Tesla stock fell by more than 10% to $829 and Tesla stock falls despite beating analyst estimates. Shares of Tesla gained strong downside momentum after the company released its Q4 report. Tesla reported revenue of $17.7 billion and adjusted earnings of 2.54 cents per share, beating the analyst estimates on both earnings as well as revenue. And while quarterly results were really strong, the market focused on Tesla's plans for 2022. Their factories have been running below capacity for several quarters, and supply chain became the main limiting factor, which is likely to continue throughout 2022. It looks that the market is worried about Tesla's ability to reach growth targets amid continued problems in the supply chain, and for high-valued stocks like Tesla, failure to show expected growth could have a very significant negative impact on its share price. Today's market is very unforgiving because if you show a little bit of promise like Tesla did, the market stood behind them and that's what increased its stock price. But if Tesla's ability to grow as quickly in the future is diminished, people will start to believe that Tesla will not be able to grow as fast as it's growing right now, and that is going to have a very significant impact on Tesla's stock price. ARK sure has left some wiggle room considering all of the factors, and by their own admission, a lot of things must go right for their predictions to come true. To hit the base case, Tesla would need to sell 5 million cars by 2025, up 900% from the 500,000 cars sold in 2020, ARK says. Additionally, Tesla's electric vehicle revenue needs to hit $234 billion by 2025, up 800% from 2020. Meanwhile, ARK is making a big bet Tesla will be the leader in the holy grail of transportation, self-driving cars. ARK now thinks Tesla has a 50% chance of making fully autonomous driving in the 5 years a reality. ARK also sees Tesla creating an insurance business that will generate revenue of $23 billion to $100 billion by 2025 with industry-shattering margins. So far, Tesla has a limited insurance brokerage business. If Tesla is able to race ahead forecasts in these measures, ARK holds out even more optimistic bull case price target for $4,000 a share by 2025. But if it falls short, then that could end up sagging to ARK's bear case of Tesla only being worth a $1,500 a share. And yet, even in the bear case, Tesla would be worth nearly 130% more than it's now, or $1.4 trillion. Even ARK's disappointing scenario would mean 18% average annual compound growth over the next 5 years. Cathie Wood's ARK's bullishness on Tesla is unwavering. The new price target is even more bullish than last year's call. Last year, ARK said Tesla stock would hit a split-adjusted $1,400 a share by 2024, and now it's taking the target up more than 100% in a year. But the market is getting nervous on the Tesla story, and shares of Tesla are down 7.2% this year so far to 654.87. The ARK's price target on Tesla stock is well in excess of what Wall Street analysts are calling for. Analysts think Tesla will only be worth $610.52 a share in 12 months, or nearly 7% less than Friday's close of $654.87. Looks like ARK and Wall Street are on a collision course again. Who will be right this time? Only time will tell. And that's all for today. Thanks for watching. If you enjoyed our video, please like, share and subscribe to our channel for more such exciting content and latest updates. See you in the next video.